Welcome to the daily update, where I'll go over the action in the market for Tuesday, November 19th, and we'll see how things look for Wednesday, November 20th. Well, there was some geopolitical things that occurred with Ukraine using the permission that they were given to shoot some missiles into Russia. One report I read said five out of the six were knocked down. The other one said all of the missiles were knocked down. And the European markets really had a negative reaction to that. The futures had a negative reaction to that. And we had a lower open, but then it's like, okay, nothing to see here. Let's go back in and start buying the dip. And we're still above the 20 period moving average. Now, we did have an up day, but it was below average with volume. The big report coming out after Wednesday's close will be earnings from NVIDIA. And the market's really anticipating that. It's become a major event every 3 months. And so we'll see if that gives some kind of direction to things, because the market is pretty much ignoring the geopolitical events that are going on, or at least not being bothered by them for more than a short period of time. We are still positive when you look at the moving averages, but we see internal weakness. Some of it's improving, some of it's not really improving right now. So we're getting a mixed picture as we look at everything here. Before I get into the video, there's a thing called the SPX investing program. It's up, it's going, it's free until the end of 2024. One of the benefits is that you get access to the videos right after they're made available. If you have any questions, you are more than welcome to send me an email. Also, the daily video is really the foundation of all the analysis that I do. Okay, let's go back and talk about what happened. We had a lower open and we were down a lot more. We were about well, 3/4% to 1% lower. But then there's this really intense buy the dip mentality right now. So we'll see if that continues to go on. It's like we see some weakness and then buyers come flooding in. So we opened up below S1 at 58.70 and then we climbed. We got above the daily pivot above 58.89 and then we got above the unchanged level. So we went positive and then we continued to climb. We got up above R1 at 59.13. So we were above the 5900 level. We stalled out right at around the 59.25 level, just a little bit below that. And we closed slightly above R1. So we were up 0.4% on below average volume. It's a mixed picture when you look at all of our indicators, but when you look at just the trend itself, we're even some of our trend charts are giving us mixed signals right now. But based on where price is compared to the 20, 50, and 200-day moving averages, we're still positive. Interest rates, which really shot up, actually, they came down. I'm sorry about that. Because as things were developing geopolitically, there's this flight to quality. So we saw a lot of money coming out of the futures and going into bonds. And when that happens, prices go up and interest rates go down. And we ended up dropping a little bit there. The dollar was virtually unchanged on the day. And we'll have to see, is this focus on geopolitical concerns, is it just going to be considered pop news that they'll just come and go away? Because there's a real threat that things could really escalate, and the U.S. may be involved in that, not only because of the direct supplying of missiles to Ukraine, but because of a NATO member. And if a NATO member gets attacked, then the U.S. is obligated to respond back to that. So let's hope it's just a lot of hot air being floated around, because there is hope that once the new administration comes in, that there'll be a chance that this could be settled. And so why mess up things right now if things have a chance of getting better down the line? Okay, and then we'll just have to see if there's any more fallout. There's a lot of the headline news, the pop news right now is who Trump is picking for his cabinet and the all the controversy that goes on with that. You have one side saying, "Oh, it's great," the other side saying, "Oh, this is the worst thing ever." Well, this is just part of how politics are played out. All right, so some comments. Another day was pretty good for the large caps and the semiconductors. So that is helping the markets hold up right now. There's still things going on in the Middle East. We are still around the 69 level with oil, and we're keeping an eye on developments between Russia, Ukraine, which could include NATO and the US in that whole scenario. We just have the Sean trend meter, which is looking extreme, and even that is sideways to even declining a little bit. It's not really extreme, but no short-term indicators or long-term indicators. We don't have a list right now as the market's just kind of bouncing around. No change with the scenario. There are some rising doubts about future rate cuts because of these stronger than expected economic reports. The dollar was unchanged. Interest rates were down. We closed at 4.38%, where we had been at 4.41%. We're still close with the 10 to the 3 month, but it remains inverted where the 10 to the 2 year is uninverted. Sentiment didn't change. We were at 50 after Monday. Now we're at 50 again after Tuesday. We've actually switched back to positive with our trend. The green line is just barely going above the red line, but it's still weakening. We're still, as we're shifting around, we switch over negative, we switch back over positive. The ADX is not quite sure what to do with that, and so it's declining below its moving average, but we're still above 20. And now we've had two up days, so the bias is positive. I'm changing the momentum to mix just because we're getting so many internal measures that are conflicting each other right now. We had housing starts come out at 1.311 million. That's less than the 1.34 million they had expected and down from the 1.35 million that we saw last time. Building permits also less than expected at 1.416 million. They expected 1.441 million and down from the 1.425 million. So here is a chart. This is a 3 month average of looking at housing starts and building permits, kind of leveling off when we look at building permits here and actually seeing a bit of an increase with housing starts. And this is just a look at the bars, seeing that it did come down from the previous reading here with housing starts. And then looking at our overbought, oversold composite, we are dropping as the market's been under pressure lately, but we're still pretty high at 77. It's really when we get above 80, that's when we start to become quite overbought. But still, anytime we're above 75, this chart considers it to be overbought. So there, if that's true, there could still be some more pullback that would be justified according to this chart. And price and earnings, looking out from Goldman Sachs, they expect by the end of 2025, we'll be at 6,500 with the S&P. Okay, fine. Make your little projections, and here's the earnings going forward as well. I don't do projections myself. We just evaluate where things are at right now, but people love projections, and so they latch on to things like this, even if it ends up being completely different than what is the projection. Then consolidated equity positioning, we're seeing a lot of money going back in since the election. We're still a little bit under this one level, which would be extreme. And then the rise in the S&P in 2024 has been one of the strongest since 1928. Well, you know what happened after 1928. We had 1929. Not predicting anything by that, but things were looking really good before they turned really bad. So we just want to be aware that things can change. And the market's been doing very, very well in spite of all this craziness going on. And then Goldman Sachs is also saying, well, since the euro's already going down, they figure it's going to go down even more. If we get down to 100 or one right here, that would be at parity where the dollar and the euro are at the same. That's more advantageous if you want to travel to Europe, but not really as good as far as dollar strength. Sometimes that can weigh down on stocks. And then Russell 2000 net futures contracts, a lot of folks still getting into that, even though we're still seeing this general pattern of a huge move up and then a number of days coming back down and then another move up a month or two later. Well, a lot of folks are really focusing more on the small caps, thinking that economic growth and lower interest rates and lower regulations are really going to help things going forward. Morgan Stanley has a strong 2025 outlook for stocks. This is the bullish case we'll get just up under the 7,500 level. They figure that we're going to get up to 6,500 as their base case. And if things turn bad, we're going to fall down, what is that, 4,600 or so. People love their projections here. So then we expect a small hit to growth in 2025 and a moderate boost to growth in 2026 under our baseline policy assumptions. Okay, this is just trying to project out what they think will happen as far as growth is concerned, not only into 2025, but out into 2026. The market implied change in the Fed funds rate, they do see it going up a little bit here right now. And then what's the NFIB Small Business Optimism Index? We already had that come out. It came in at 92 with the survey, and the actual was 93.7. So we're seeing a little bit of an improvement with the small businesses. And then let's see, intraday chart. We did end up having a gap lower open, and the market was ready to break to the downside, but the second we saw any weakness here right after the open, boom, there was immediate buying coming back in. So yeah, we gapped lower, but it really didn't pick up at all, and we saw a lot of buying on the dip right here. And then we were able to get back above S1, get above the daily pivot. We went positive, broke above R1, but just stalled out underneath the 59.25 level before falling back down under R1 and then closing slightly above R1. And seeing a little bit of strength here. We were up about 0.25% before I started recording with the initial overnight session, but we did see a lot of weakness in the futures before the market opened, and Europe was really taking a hit, and then that was a real comeback. Now, that could be taken as positive, so we'll have to see if there's any more follow through to this. We are seeing an improvement here with our intraday chart of growth versus value, where the blue line's going up. The red line was actually down on the day. And a little bit of an improvement here where it's been seeing some weakness with our growth to value intraday chart. Well, in Tuesday's session, that really improved because we were up almost 1% with growth where value was actually down, and growth was up a little bit less for the mid caps, and it was up for the small caps where value was down for the small caps. So seeing a bit of an improvement, but still a longer term downtrend with small cap growth to value, mid cap growth to value downtrend, a bit of an improvement, and a little bit of an improvement here with S&P growth to value and still in a longer term uptrend. So this is still holding together for the time being. Coming back up out of the top end of the rainbow when we look at the growth versus value ETF. Coming down a little bit with discretionary to staples. So we're seeing discretionary pulling back a little bit. Staples hasn't been all that strong, but it was up, but enough to have our ratio actually decline slightly. But this is still looking pretty solid. When we look at large cap growth, we were up 1% after falling back here. So that's still just looking like a pullback. This is where we're seeing a change, where the green line, even though it's going down, is actually crossing back above the red line. This is kind of confusing here. Not really seeing much conviction either way with both lines going down. The ADX is declining. It's still barely above 20, but it's below its moving average. So if we drop below 20, that would be a non-trending environment, and we'll have to see which line, blue, green, or red, ends up being on top. Also, kind of right on top of each other in the short term, we've actually already dropped below 20 with the ADX in the short term. So in the short term, we're now not trending. We're still just barely trending in the intermediate term. And we did see a drop off in volume to below average. And we picked up with the VIX. So we had an update, but the VIX went up too, both with the line chart and the bar chart. The VIX of the VIX also increased a little bit with the bar chart and the line chart. The momentum of the VIX is still down, but the MACD is still turning up, but it hasn't crossed above its moving average. Overall, seasonally, what we typically see during this time of year from November throughout December is a decline in the VIX. And we declined a little bit with this fear gauge, and we were up with this other fear gauge, also getting some contradictions here. We went up with the daily chart of the equity put call ratio. We're going up with the 5-day chart, but we're continuing to go down with the 10-day chart. Again, a little contradiction there. Volatility risk premium still rather low. This is not really picking up a lot of risk going 30 days out into the future. And not much of a change here. We actually declined a little bit with the advanced decline line based on price. We were a little bit up and then flat with the advanced decline line based on volume, but we're still above the moving averages. So that's still holding up there. We're really dropping off with the 5-day average of the new highs minus the new lows, and we're flat with the 10-day. So we're seeing a bit of a decline here with the new highs and a bit of an expansion of the new lows. And we're turning back positive with accumulation distribution. We're going back above the moving average. And we're still negative in the short term with the advanced decline ratio, still barely positive in the intermediate term advanced decline ratio, but we're still negative here with the Chaikin money flow. We ticked up a little bit with the histogram. The red line is flattening out here, but overall it has been declining. And we're coming right back up to the midpoint, but still slightly negative with the Chaikin oscillator. So we're seeing a little bit of improvement with our smart money indicators. The vortex actually declined with the green line, also declined with the red line, but this is still positive. And not really seeing much of a difference between the S&P and the NYSE advanced decline line here. A little bit of a tick up with the cumulative advanced decline line based on price and volume for the S&P. Coming back a little bit above the moving average with the cumulative advanced decline line on the NYSE flat and below the moving average with the NYSE advanced decline line. Common stock, a little bit of a tick up based on price and volume, but not anything real strong. Still below the moving average with this other NYSE advanced decline line. I wanted to show this because we're dropping below zero. This is longer term. This is the Amex, NASDAQ, and NYSE, a 5-period moving average of the highs minus the lows. It had been declining. Now we're starting to go negative. And that's more of a broad market negative sign, a little bit longer term. And we're still below the moving average with the advanced decline line for the NYSE common stock, still slightly above the moving average on the S&P, dropping below with the mid caps and the small caps, below their moving average, declining but still above 50 with those stocks above their 20-period moving average, declining but still above 50 with those stocks above their 50-day moving average, and we're declining with the 100-period moving average and 200-period moving average. So these are not showing improvement. In fact, they're still seeing more weakness. So still above this dashed line pivot point. I know it's really hard to see with this big P right here, but we're still above this level and we dropped below the moving average with volume. We declined with the 20, 50, and 200-day moving averages. Not what you really expect to see with an up day for the S&P. We did cross back above the midpoint with the Stochk RSI, so that's slightly more positive. We never did come down below the midpoint with the Williams percent R. We're starting to go back up there. A little bit of an improvement with that. We're right at the midpoint with the CCI 14 and a little bit above the midpoint with the CCI 20. Nothing extreme in the short, intermediate, or long term with the stochastics. Going back up with the slight up day on Monday and Tuesdays. Still declining in the intermediate term and declining in the long term. Going slightly back to positive with the force index. And we're still below the green line and the blue line here with the condition of our short-term trend. So that shows still some vulnerability there, but we're still above both the simple and exponential 20-period moving averages. So that is holding up for the time being. We're going a little bit further above the midpoint with our standard deviations chart. We're looking a little more positive with the balance of power. And we're still below the red line and the blue line with a 50-period moving average. We're still looking more negative with the go, no-go system with the lighter blue bars, slightly above the midpoint with the highest high value chart. Turning back, this is a little bit of improvement here. The TTM squeeze has gone from dark blue back to light blue. That's more positive. And we're just barely positive here with the ease of movement. The Arun indicator has not changed, but is still positive. McClellan oscillator continues to decline below zero, so the summation index based on price and volume continued to decline. And we saw a bit of a tick up here with the NYSE McClellan oscillator, but it's still below zero. So we're continuing to decline with the summation index based on price and volume. We flattened out with the Swenland Trading Oscillator based on price. We actually turned up a little bit with the Swenland Trading Oscillator based on volume. So you can see the mixed pictures that we're getting across the board here. Momentum is showing some weakness now, coming back down to the moving average of the PMO, declining based on price and volume. A little bit of a decline with the PMOs that are rising. The buy signals are declining, and we're flat after declining with the PMOs above zero. But momentum with the slope oscillator is still looking positive. But the MACD is now turning negative and crossing below its moving average. So the slope is looking okay, but the TSI, the other short-term oscillator, it's actually turning negative with the MACD. The PMO is coming down to the moving average, dropping below the moving average with the PPO, flattening out, but still positive with the TRIX and the KST with the longer term momentum oscillators. Still positive here with the Copic curve and coming back up just a little bit with the Sean trend meter, but not really extreme positive. Above 50 with the money flow, improving but still below 50 with the ultimate oscillator, above the moving average with on balance volume. RSI still above 50 with the 14 period, coming back above 50 with the RSI 9, the short term one. Moving averages still holding up for the time being. And we've gone from negative to neutral with the Elder's Impulse system. We're still positive with the parabolic SAR, and we're continuing to decline with the bullish percent index. Also declining with the NYSE bullish percent index, but turning up just a little bit with the NASDAQ 100 bullish percent index. Still hanging out just slightly above this mini rainbow in the short term. So this support continues to hold as well. We're turning more negative again with the Heiken Ashi chart, but we're positive with the Kegi chart. So there's some contradiction there. We're back to positive with the Renko chart, but we're looking more negative with the three-line break chart. So we have two that are positive, two that are negative. And not really much of a change here with the 150 or 200-day moving average studies. And we're still negative in the short term with the NASDAQ 100. All the other indexes continue to be positive on all time frames. No real changes here. Bonds are still negative in the short and intermediate term. Commodities have switched back to positive in the short term, but still negative in the intermediate and long term. The dollar is now positive across the board on all time frames. And kind of a split here with tech communication. Those are growth areas, and they were the stronger areas. Discretionary was up just barely. Financials, after they're just hitting all-time highs, it seems like, and really holding up well, but they ended up being down the most. And we saw some red at the beginning of the day with the Dow having a MACD bearish crossover. We got below 43,000. Then we started to see some improvement as the Nasdaq got above first 18.7 and then 18.8. The S&P got above 5,900. We had real estate with a MACD crossover. That's really been getting hit hard lately. But then the Nasdaq had a bearish MACD crossover. Canada still seems to be doing pretty well there, and we had a bearish MACD crossover with the S&P. And I showed that chart just a moment ago here. Not really seeing much of a difference between the weighted and equal weighted version of the S&P. The Dow was down just a quarter of a percent, but did close well off of its lows. The diamonds have gone from neutral to negative for the Elder's Impulse system. The Nasdaq still holding out above this R1 level. That shows that support is holding here, and we're back above this R1 level here with the Nasdaq 100. We've gone from negative to neutral with the Elder's Impulse system for the Qs, but the momentum for the Nasdaq 100 is now negative. And we were up about a quarter of a percent with the small caps and up 0.75% with the Russell 2000 small caps. So we're starting to cross back above 50 with the RSI, but the momentum is now continuing to be negative. We've gone from negative to neutral with the small caps with the Elder's Impulse system. Mid caps. Now, this is interesting. We came right down to this R1 level. Now, there was times earlier in 2024 when it was the mid caps that were actually providing support to the market. Is that what's happening here? We came to this pivot point and we were able to bounce up off of that. Now, we weren't up all that much, but to close well off of its high is encouraging. But they're still negative with the Elder's Impulse system for the mid caps. And we were up 0.46% with the Wilshire above its 50-day moving average, up 0.47% with the total U.S. stock ETF. Financial sector was down 0.2% after getting really close to all-time highs here. The FANG index was up 1.82%, but still not back to an all-time high. We're still above this longer-term trend line and below this shorter-term trend line. Apple was up 0.11%. Amazon was up 1.44%. Microsoft up almost 0.5%, still below both of these moving averages, though. Google was up 1.68%. Meta was up 1.21%, still below its 50-day moving average. Nvidia, this is the big thing, a 4.89% increase. Are we going to see selling after the earnings report comes out, or are we going to really break to the upside? That's what the market's anticipating. You've got folks that think, yes, we're going to break higher. No, we're going to break lower. That's the way these things usually work out. It's just a gamble at this point. Tesla was up another 2% here, and this is what held the market together. Netflix just continuing to go up, another 2.87% there. Seeing a bit of an improvement with US versus world stocks in the short term, still seeing the longer term correlation deteriorate. Oil not really moving all that much in the 69 range, and the dollar was unchanged, but still looking pretty solid here lately. We were down with the 10-year yield. We were up with the 10-year based on price. And we're coming back up to the moving average with the Q to S&P ratio when we look at our growth to value ratios here. Discretionary to the S&P still looking the strongest right now. And we came back above the moving average when we look at large cap growth versus large cap value. So the large caps improving a little bit, still looking a little better and turning back up with the mid caps and the small caps. So what's our outlook for Wednesday? As I've said a couple times now, NVIDIA will report earnings after the close on Wednesday. That will be highly anticipated. I'll be watching just for kicks to see how is the market going to react to that. And the technicals, we are still positive, and there's just very little reaction. There's initial jolt reaction, but then it's like it doesn't last very long when these geopolitical things are coming out now. And we're going to get the MBNA Mortgage Applications Index. We get that every week. It's not a major report. And then all the geopolitical stuff between Russia, Ukraine, where's the US involved in all that? Where's NATO involved in all that? There's still things going on between Israel and Iran. And then any kind of election reaction other than who Trump wants to appoint to the cabinet. That seems to be creating lots of fuss these days. And then we're going to get weekly jobless claims on Thursday, LEI as well, and then the manufacturing and services global PMIs will be coming out on Friday, as well as consumer sentiment. So we have crude oil inventories. I really don't track those all that much. Seasonality, neutral to negative with the Dow, where we're neutral to positive with the S&P and NASDAQ. We are still in the week after options expiration, where we have a pretty good edge here, up 63% of the time, down 37% of the time. This is a new chart that Stock Traders Almanac put out here. This is the Tuesday before Thanksgiving until the second day of the new year. Of course, here's the small caps, which everybody thinks they're just going to go to the moon, but they go to the moon and then seem to come back. I focus more on the S&P. We're up 2.58% going back to 1950, with the median being 2.4%. We're up 59 times. We're down 15 times. So that's almost 80% here, with the average win being 3.78%, the average loss 2.13%. So it can be a pretty volatile time either way here. So looking at the probably, according to this, the end of negative seasonality before we could potentially get into some positive seasonality going into the end of November. But we've been really deviating away from that. So we'll have to see if this even means anything. Wednesday in 2023 was the most negative day of the week, and it's a little more positive in 2024. And now we're finishing up this negative time, according to Tom Balley's research, and we'll be coming into the more positive part of November. Also seeing some positive seasonality according to the Carson chart. Also after the election, according to this chart, and what happened back in 2020 after the election. So the accumulation distribution, it should be on the positive side, but we're just seeing some weird signals right now. And we're still weakening with the Chaikin money flow. The Chaikin oscillator is improving, but it's still negative. So I want to keep these three together, but we're actually looking more positive here with accumulation distribution. We're still negative with the S&P McClellan oscillators as far as the S&P and NYSE and the summation indexes. The Swindlen Trading Oscillator, but it did turn up based on volume. It was flat based on price. We're still going up with the 5-period equity put call ratio. The oscillators are weakening and starting to turn negative now. And the ultimate oscillator is negative but improving. The momentum for the NASDAQ 100 is now crossed over negative. And then the positive sign is we still have the vortex with the green line above the red line. Growth to value for the large caps still holding up. Discretionary staples also still holding up there. The 10-day equity put call ratio chart is still going down. And I'm mainly focused on the S&P 500 when it comes to the advanced decline lines. We're still above the moving average. The moving average studies are still positive, but with the up day, they actually declined. Parabolic SAR is still positive. The bullish percent indexes were still declining with the S&P. We ticked up a little bit with the NASDAQ 100, and we're declining with the NYSE as well. Again, some mixed pictures there. The ease of movement is still positive. The money flow is positive. The financial sector, even though it got hit a bit on Tuesday, is still positive. So our conclusion, we're still positive. The market is pretty much ignoring geopolitical events. That could change at any time. We freaked out in Europe. We freaked out before the market opened. If something else develops, is a freak out going to see any follow through here, or are things going to be able to calm down? We're seeing a little bit of improvement, but it was on below average volume. But we're still seeing some other indicators that are just not improving right now. We are still positive. We're above the 20-period simple moving average, seeing a little bit of an improvement in the short term. We're still seeing things positive in the intermediate term, but that's where a lot of our weakness is coming from. But some of those charts are improving. We're still positive in the long term, though. Thank you. Have a really good day, and I will talk to you in the next video.